More on the markets, including some key technical levels that she's watching. We want to bring in Katie Stockton. She is founder and managing partner for Fairlead Strategies. She's also a CNBC contributor. And Katie, Mike was just talking about 4,200. You say the 4,155 range for the S&P is really the level that you're watching closely. How long do you have to see it break above that in order to make you feel like, okay, this is a level we've broken through?
Well, it's super important for any breakouts to wait for confirmation. And so we like to see with a major level like this 41.55, which has been in play for several weeks now, we like to see a couple of weekly closes above. So that would mean if we see a close above today, which seems likely, and then also next Friday, that would be confirmation. The market is in a better position to do that than it was in late April when we saw one close above but failed to confirm. That failed confirmation usually is a setback. So we want to make sure that we wait for confirmation. It is somewhat of an emotionally charged environment at this time. And because of that, it's somewhat prone to these kind of false breakouts. And I would argue that the NASDAQ 100 index, the acceleration higher that we've seen there, seems a bit unsustainable. So I don't think folks should feel bad about waiting that extra week. I think we'll see some consolidation short term, even if we do get those confirmed breakouts, which we would see as bullish longer term developments.
So if you see a breakout over the next week, you would then say that's a buy signal because the next level is what?
That's right. So the breakouts, they do tend to be actionable. It doesn't mean you have to buy right away. Usually we like to wait for that first pullback or consolidation following a breakout. But the next levels are only really about 3% above, but you can get a target based on a measured move if the S&P 500 confirms its breakout above 4,500. So to me, that seems like sort of best case scenario for an intermediate term objective for the S&P 500, with interim resistance residing just above 4,300. We did see, interestingly, this week, the Russell 2000 index got above its 50-day moving average for the first time since early January. So it's the first signs of life that we've seen in the small cap arena. So what I would suspect is that if we do get those confirmed breakouts by the large cap benchmarks, that it actually would be a great trigger to add small cap exposure, because if you look at the ratios there, they're relatively oversold.
Yeah, and have been for a while, too.
That's right. They've been downtrending in relative terms for some time. The Russell 2000 index does have some key support not far from current levels. Downside momentum is still an issue there, but I suspect if we do see those confirmed breakouts, that would restore some confidence in those stocks that have underperformed so dramatically. We also have seen, of course, some rotation into the cyclical areas of the market this week, including financials, which, of course, were also relatively oversold. And I know the Russell 2000 is somewhat heavy on that sector.
What's the financials signal that you watch?
Well, with the financials, we watch the DeMark indicators, and for the first time into this downdraft, we have pretty widespread signals from a bottom-up perspective, supporting just a bounce of 2 weeks. So we're not advocating counter-trend exposure. We usually don't do that, but we do expect a bounce. So what we're recommending to our clients is to wait for a better selling opportunity for existing exposure, and the bounce in a lot of cases will at least get these names perhaps back up to their 50-day moving averages. The 50-day moving average is a great gauge of initial resistance in a downtrending stock. So that's the kind of expectation that we have from financials.
Katie, what's the buy signal you say you've seen in WTI and oil?
In WTI crude oil, we have short-term momentum having improved there. It manifests itself on the daily bar chart in a MACD buy signal. So that's a short-term momentum buy signal. And that follows a shakeout from a couple of weeks ago. It was a bit tenuous there for a while. But we do look for upside follow-through, at least near term, with resistance defined by the downtrending 200-day moving average. That's roughly $80 per barrel. And of course, that can be a boon to the energy stocks, which are similarly oversold as it pertains to the financial sector.
Katie, do you look simply at the technicals? Is there any time that you kind of try and factor other broader macro issues into it, whether that be the Fed, whether that be debt ceiling or anything else? Or is there anything you can glean from the signals that is maybe being indicated because of those larger issues?
Yeah, I mean, we listen to all the other macro strategists out there, and we certainly think through that in our own investing. But in terms of our research, we really focus on our primary expertise, which is technical analysis. We believe that a holistic sort of portfolio manager will use all disciplines. So we think technical analysis is a great complementary discipline, and that always there should be sort of a macro and fundamental component to things. But we pay attention to the same headlines, and we like to see the reaction from the major indices to these headlines. Clearly, there's been a bid this week in regards to the chatter around the debt ceiling. I've seen both sides of that too, in terms of what I've read. But if we see a breakout confirmed, irrespective of what's happening with the debt ceiling, we would believe that breakout. But of course, there's a lot of sort of potential headline risk between here and next Friday.